Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Chewy, ticker symbol CHWY. And here I am recording this on Sunday after Chewy closed on Friday, May 17th at a price of $16.04, being down just about 5.5% during the day, but going up, just a tiny bit, about 6 cents in the after hours session. And over the course of the week, Chewy did go up almost 4%. So not looking too bad if we look at it from that perspective. But actually, from this perspective, the price is pretty low. And so what I wanted to go over is this downtrend that the price has been residing in since going back to January, the middle of January. And so what I could see coming up is that there might be a break out of this channel around earnings, which is coming up, I believe, on Wednesday next week, May 29th. Unfortunately, I have to work that day, but maybe I will do a follow-up on this next weekend. So let me know if you'd like to see that in the comments down below. But here, just going over the chart, there are a few things that stand out to me. Really, I do just have these levels to the upside that do stand out as pretty important, and some of them do coincide with levels from a Fibonacci retracement, which I will do in just a minute. But I did want to go over my justification for why these levels are important before I do that retracement. And so here, starting with this purple line at $19 a share, does correspond with the tops over here. Did get a little bit of a bounce and almost some tests of that level. So I do think that one will be a key one to break above, really in getting out of this downtrending channel. Then the next level up is the red line at $20 a share. Does make sense, just being, like $20 bill. It's a psychological level. I think that will be important. And also it does seem to correspond with the approximate top here acting as resistance. So getting above that level, I do think will be important. Next up is $21.13. I actually meant to adjust that to $21, but that does represent, let's see, the close hit on November 3rd. So that's the reason why I have that level there, not at $21. But considering that that general price area does correspond with the top over here, I do think that could be acting as resistance again. But if price can get above that level and just the same, get above $20 or 19, I do think those levels could then be acting as support. Then next, moving up, I have $22.35. That was the close on January 2nd. And so from there, we did gap down. We also had a gap down from, let's see, the close the previous day, $23.63. So I do think those gaps need to be filled. So getting up to $22, $23, I think will be pretty important. But then getting up to $25, I suspect that will be pretty notable resistance as it was before. But if price is able to get above that, I do think that will be then notable support, so good to keep that in mind. But in the more immediate time frame, what do I see happening? Really, I do expect that price will come down to test like the midpoint of this channel. And so that could be coming down to around $15 a share, maybe before earnings. If volume seems pretty low before earnings and price is right around 15, I think that could signify that this pullback is not going to be all the way to the base of the channel. It could be bouncing off of the midpoint with low volume, then getting a surge of volume that could be popping the price out of this downtrend, maybe getting up to 19, 20, 21, and or higher. So I would expect some volatility there. But if we do see price coming down over the next week and a half and volume is going up while price is going down, I do think that could mean that the earnings call might be followed by a sell-off. So do look for 14.69 to be holding as support if price does go down. If it does not hold, then, of course, I think price is going lower. But I feel pretty compelled by a stop around $15 a share, the price to turn around there. Of course, if volume is low, as we have seen lower highs in the stock price, we have also seen lower highs in the RSI, so there's no bearish divergence there. But, we do need to be forming a bottom, and, hopefully that has been formed at 1469. 15 is the turnaround point, and earnings triggers a launch to break out of this downtrend. I think that would be great. And so I just wanted to do a quick Fibonacci retracement here, going from the high of $25.24 down to the low of $14.69. And so with those levels adjusted just right, we can see how some of them do correspond with the levels that I've talked about, levels that have acted as resistance that we need to be reclaiming as support. And so I do think from this, could have done this retracement going back to the 25th of April when we hit this low, and we would have been given the level of $17.18, which is the 236 retracement. We did have a high on the 14th, just above that of $17.33, getting rejected from that level and pulling back. So we will need to be seeing some closes above 1718, or specifically getting closes above that high of 1733 to be showing some strength and that we are breaking out of this downtrend. And then the next level up is the 382 at 1872. Does correspond with a couple tops here, so I do find that pretty interesting. Does fit a little bit better than $19, but really just that range about $18.50 to $19, that is going to be a pretty key one to be getting above, specifically getting above the highs that were hit on March 12th, which was $18.74, and the high from April 11th at $18.69. So look for closes above both of those levels. Really, 1880, getting above, closes above 19, that would look really good. Then the next level matches almost perfectly with the red $20 line with the 50% level at 1996. Really, I think that's just going to be a really, really tough one to get above, but if we can get and close above it, hopefully that will then be acting as support to move to the next level, which does seem to correspond pretty well with the 618 at $21.21. So again, look for closes above that level. If we can't get closes above it, like we did not get closes above the 382 here, or did not get closes above the 236, I'd look for a pullback and a pullback to the next level down. Then that could be a nice level to add back in or, accumulate more. But, it's good to be trimming or selling at resistance rather than buying there. And, when we do pull back to 15, if that does happen, that might be a good time to add, assuming price goes up following earnings. That's what my guess is, but I could be wrong. I do think that earnings will trigger this to break out, to move to these levels higher. And then the next level up here on the Fibonacci retracement is the 786 at $22.98, right around $23. That corresponding with this gap fill, but still having this gap just above it to be filled. So maybe that level does act as an important level of resistance before regaining footing at either the 618 or the 50%. Perhaps, the 382. I do think because we did hit a double top at that level, I do think that will be a good one to establish a floor at if we do get rejected at any of these higher levels. And then, of course, the 100% level would be at $25.24, just above the yellow line. But I didn't add that on here. I did not want to clutter it because we got that yellow line on there. But I did add one other level, which is the one at 618, which is at $31.76. Possible price goes up there, but there is another level just below it that I think we will need to be paying attention to. That is at $27.33, corresponding with a gap that was formed following the trading day of August 30th. The close on that day was $27.33 and then gapped down. So we will need to fill that at some point. And I do find it pretty interesting that following that gap down, there was this consolidation. So I suspect there will be a lot of resistance right around 25. So we'll probably be getting rejected there, pulling back before tackling this gap and this level to the upside. right around $32. And so I just wanted to take another step back. Why $31, $32? We do start to see some consolidation here, some bottoms formed right around $31, coming down here to around 29. So once we get up to those levels, you got to think about it as there were some buyers here. They've been holding the bag. They might want to offload some shares when price gets up to the $30 range. So do keep that in mind. I do think it is possible that over the course of this summer or the year, that price could be returning to $32 a share. But there are a lot of levels that we need to get above first, and especially need to be breaking out of this downtrend. So, those are some things to keep in mind. And before I do close this, I did want to throw up this volume profile just to show that there is this nice big volume shelf just above or right around where current price is. And so I do think because of that, price will likely be coming down to $15, and then I would imagine blasting through that level, then reclaim it as support, or maybe the one above with this little ledge here to then be the launch pad for the next level up. The 618 does seem to correspond with this ledge here, so maybe that is where we'll be going in the next month or so. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching, and thanks for the request. Take care.